Welcome to another S&P 500 analysis. Market participants are showing no fear. The VIX hit a multi-year low last Friday, and the S&P 500 crossed over 4,300 again before it closed the week just slightly below it. So are the market participants being too complacent? Are they not aware there are a bunch of market-moving economic reports throughout this week? There is the CPI report on Tuesday morning before the market opened. And then on Wednesday, we have the PPI report before the market open. Then on Thursday, we have the jobless claim, the Philadelphia Manufacturing Index, retail sales, and also industrial production. And did they forget there is a FOMC meeting this week? Although the Fed is very likely to announce on Wednesday that it will hold interest rate where it is for June. But are the market participants prepared for some hawkish commentary from J Powell during his press conference at 2:30 on Wednesday afternoon? In this video, we'll look at the price action of the S&P 500 and the other major market indexes, the market sentiment, market internals, the 10-year yield, US dollar, oil, silver, and gold, and see what we could expect for the coming days. Stay tuned. Now let's take a look at how the indexes have been performing. Looking at the week to date, last week, the Russell 2000 was the top performer with a 1.9% gain. That's second week in a row. And for the second week in a row, the Nasdaq 100 is on the bottom of the list and actually went negative and it lost 0.13%. And month to date, the Russell 2000 is also on the top of the list with 6.6% gain. And the bottom of the list is the Nasdaq 100 with a 1.92% gain. Now for year to date, the Nasdaq 100 is still holding the top spot with 33% gain, while the Russell 2000 is only close to 6% gain, and the S&P 500 almost 12% gain, and the Dow Jones Industrial only a 2.2% gain for year to date. And looking at this S&P 500 weekly chart, we see last week the S&P 500 had a range of just a little bit over 61 points, or 61.55, and it gained 16.5 points or so, 0.39%. It closed near the 4,300 level. After it peaked above the 4,300 level, it closed at 4298.86, so it's just slightly below that, and also closed above the 10-week and the 40-week moving average. In addition to that, it is one-time framing up. Now, looking at the sentiment chart, we notice that the VIX is in a multi-year low, and it closed Friday at 13.83, but the put-call ratio is sitting right near this 0.75 level. So although the market participants are very complacent, but they are lining up of risk a little bit. And for the up-down volume ratio last week, it was pretty anemic in the New York Stock Exchange. The up-down volume ratio was negative on Friday, with the S&P 500 being positive, and also the daily advanced decline was negative as well on Friday. So there were more declining stock than advancing stock. We are continuing to see negative divergence between the internals and the S&P 500. And the new 52-week high outnumbered the new 52-week low throughout the week, but still not too many stocks making new 52-week high. And the negative divergence between the cumulative AD line and the S&P 500 still unresolved. And here is a bigger picture of how the past negative divergence got resolved. The Nasdaq 100 closed down slightly last week. It lost 18 points or 0.13%. And we saw another demonstration on how the FANG stock dominated the index on Wednesday, Thursday, and Friday. On Wednesday, the Nasdaq lost 254 points or 1.75%. And that was mainly due to the FANG stock because of the advanced decline was actually positive 386. In other words, 386 more advancing issue than declining issue. Then on Thursday, we saw the FANG stock help the Nasdaq 100 recoup 181 points from Wednesday's loss. But on Thursday, there were only 185 more advancing stock than declining stock. Then on Friday, the FANG stock was holding up the market while majority of the stock were down. There were 1,374 more declining stock than advancing stock, and we saw the Nasdaq 100 was actually up 0.3% or 40 plus points. And also the up-down volume ratio was very subdued, so there's nothing there to write home about. The 52-week high outnumbered the 52-week low throughout the week also in the Nasdaq market, but we are not seeing an expansion on the number of stocks making new 52-week high. And the negative divergence between the Nasdaq cumulative AD line and the Nasdaq 100 continue to persist, and it is getting wider. And here's the chart that's showing the past negative divergence and how they got resolved. Now, looking at this yield curve between the 10 and the 2, we are still seeing this yield curve inverted, and it is sitting at minus 0.857 or 85 basis point. So it looks like it is heading down to this minus 100 basis point inversion. And the 10-year yield is still sitting around this 3.75% area. I'm still expecting this thing to move higher and come back up to this 4% area. And for the US dollar is holding above this 103 level, but it is in a lower low, lower high type of a pattern here. So it could come back down and possibly test this 102 area. Looking at this weekly chart for oil, we see oil is back at this $70 level once again. So we're going to watch for a possible retest of the recent low down here near this 64 area. And the upside move, possible potential is up here at this 83.40. Silver got a surge on Thursday last week, and it could be forming a bear flag. So watch this 24.50 level here. If it gets rejected from this level, then look for the price to trace back down toward the lower portion of this channel. And if it breaks above it, get above this 24.50 area, then look for a move to come up to this composite point of control near the 25 area. Gold is still holding this trendline support, and it is bouncing around inside of this Fibonacci retracement zone. So if it breaks below this retracement zone, then look for a move down toward this 1890 area, this composite point of control. But if it could break out of this retracement zone, then look for a move toward this 2045 area, this potential resistance up here. Let's take a look at the indexes, starting with the SP 500. We notice that the SP 500 came up to this August pivot high. It is forming a higher high and a higher low pattern. So if it takes out the August high, then we could look at this upper range to get tagged. That's between 4370 and 4356.20. Now, if it makes a lower low and dip below these low here, then look for the lower range between 4241.50 and 4225 to get tagged. And looking at the Nasdaq 100, it made multiple attempts to try to fill this April 2022 gap here. And it is forming a higher high, higher low pattern. So if it continue to move up and fill this gap, then look for this upper range between 14,940 and 14,838.70 to get tagged. Now, if it makes a lower low and dip below these low here, then look for the lower range between 14,218 and 14,160 to get tagged. And the Russell 2000 will move up above the 1880 level and then pull back for the week and close just below it at 1865.70. It is currently in a one-time framing down, so it could be coming down to fill this Wednesday gap here. So watch for a test of this double bottom pivot here at 1816 if it comes down and fill the gap. If it prints a higher low before the retest, then look for a pushback up toward this 1925 area. And the Dow Jones Transportation is making a move toward this potential resistance up here at 14,637. But it did form a evening star type of pattern, so we could see a potential pullback to retest this area here near 14,000 level. And the Dow Jones Industrial is coming up toward this 34,000 level. So watch this trend line for potential resistance. If it makes a lower low, dip below this low here, then look for this gap here near the 33,200 to get filled. And the New York Stock Exchange Composite Index moved above the 15,500 level and filled the gap that was made in May. Now, if you could stay above this 15,500 and look for a move toward this pivot high near the 15,710. If it is below the trend line here, then look for this gap down here at 15,174 to be in play. Now, looking at the index ETF, starting with the diamond, the ETF for the Dow Jones Industrial, we see that it broke above this trend line here and closed above the composite point of control. And it is in a 3-day one-time framing up. And on this 30-minute chart here, there is a bull flag in play here, and the major move placed it above this upper range of the expected move between 344 and 345. There's a potential resistance level in confluence with the 80% major move near the 343.28. Now, the downside scenario is for the price to come back down and dip below the composite point of control here and move down to the lower range, which is between 332.70 and 334.60. And that will also avoid this bull flag. And for the SPY, the ETF for the SP 500, it took out the August high, but unable to close above it. So if it move and stay above this high, then look for the upper range between 436.30 and 436.80 as a potential target for the week. On this 30-minute chart, we see that it has broken away from this 5-day balance, and it came back into the balance and got rejected. So if it could move away from this balance area, then look for resistance near the 431.73. And if it could break above this resistance, then look for the upper range to get tagged. Now, if it come back inside of this balance area, then we basically have a look above and fail, and we'll be watching for the price to retrace back down to the lower end of the balance area near 426.50. And if it breaks below this balance area, then look for a 1x move of the balance range. Will be in confluence with this lower range between 421.50 and 423.50. Looking at the QQQ, the ETF for the Nasdaq 100, it experienced multiple failed attempts to fill this April 2022 gap. If it could fill this gap, then look for a move to the upper range between 362.50 and 365, and the March 2022 high could be in play. And looking at this 30-minute chart, we see it is in a 2-week balance range. And if it moves below this Friday low, then look for a retracement back to the lower level of this balance area, which is in confluence with the lower range of 344.70 and 346.50. And the IWM, the ETF for the Russell 2000, we see that it poked above the 186.17 resistance level, but it closed below it on Friday. And from this pullback, we see that it could be forming a potential bull flag here. If that is the case, the 80% major move will place it in the upper range between 189.40 and 190.60. But if it pull back and dip into the lower range of the expected move between 179.80 and 180.70, then watch the 178.88 level to see if it could provide potential support. If it is unable to provide support, then watch the gap below to be in play. Let's briefly look at how the 11 sector in the S&P 500 are doing. We noticed last week the consumer discretionary was the top performer with a gain of 2.68%. The technology and the consumer stable were the worst performer for the week, and they both are negative. And for month to date, the discretionary is also at the top of the list with 6.33% gain, while the technology and also the stable is at the bottom of the list. And for year to date, the technology, communication, and discretionary are the top 3 performer, while the stable, financial, healthcare, and also energy is in the bottom 4, and they are all negative for the year, with the energy losing 7%. Here's some chart on a few FANG stock. I just want to highlight some of the zone here. This is Apple. So watch this zone here, this balance area here. If it could break above the zone, then we could see it move higher. If it break below the zone, watch this trend line for potential support. And here's NVIDIA. NVIDIA was still looking for this balance area to get broken either on the upside or on the downside. And here's Tesla. Tesla is breaking out of this balance area, and now it seems like it's moving up toward this next balance area above 260. Now, I will post my analysis on these and other FANG stock in more detail in the coming days in my Substack newsletter. And if you have not subscribed or visit my Substack page, click on the link in the description below to check it out. In summary, as we saw the chart on the VIX, it is in a level that the market participant is getting very complacent, while the market continued to be distorted by a handful of mega cap FANG stock. This week, we'll get to hear J Powell talk about rate policy going forward. The surprise will be the Fed decide not to pause in June, but that is unlikely to happen. It wants to hold the rate to give the Treasury a lower rate environment to replenish the Treasury General Account, or TGA. But don't be surprised to hear a hawkish comment from J Powell in the line that the pause in June does not mean easing is the next step. The Fed just want to pause to get more data to decide how quick and how high it will continue to hike rate to bring inflation down to 2%. And I think that might be the hawkish comment from J Powell. That is just my opinion, so let me know what you think the Fed might do or might say in the comment section below. I hope you find the contents in this video to be informative and useful. Smash the thumbs up to give it a like and post your comment to help promote this video on YouTube. And if you are new to this channel and like to continue to watch these videos, subscribe to this channel by clicking the subscribe. Thank you for watching and stay safe.